So we got the inflation data today and it was not good. That sent the market tumbling down before the open, and by the time the market opened, there was a massive gap that the S&P, Nasdaq, all of the indexes have fallen, and they fell very hard to this data coming out. But all of a sudden, it all just reversed and flipped course and went back up. I think the main thing people are pointing to for this is capitulation, where basically people were just selling with no regard for the bottom because the data was bad. The inflation was bad. The Fed's response is going to be bad. There's nothing good happening. And people were just selling and didn't care that the price is going down. They just wanted to get out. Capitulation. And that means maybe the bottom, but it could still be just a bear market rally, something that goes on maybe till the end of the week. And then we fall yet again when the Fed makes a rate hike. But the CPI data came in at 8.2% inflation year over year, which beat estimates, which was 8.1%, which is not good. So it beat estimates and it stood steady. Last CPI print was also 8.2%. So now it's not going down. It's beating expectations. And this comes at a time where oil is the big topic, where you see oil hovering around $90, the massive spike up from here. And OPEC said they're going to cut production of oil. So the oil price could be getting much worse, means gas is getting much worse, energy prices get much worse. So there's a lot of things that aren't even included in this CPI print at 8.2% that could cause the next one to be even worse. But putting that aside, we also have a long laundry list of things that are just skyrocketing in price due to just inflation and everything going on over the past year. And these are some of the big ones. Fuel oil up 58%, gas utilities, gasoline up massively, electricity up massively. Basically, the whole energy sector is just skyrocketing, like no end in sight, and it just keeps going up. Transportation's even up. Food at home up 13%. You see new cars 9.4% in the overall CPI. Used cars are a little bit less than the CPI. And shelter, which I think is what we consider rent in the CPI, is up 6.6%. But there are things on this list, even you can look at shelter and say that it's probably not 6.6% for the majority of the country, because if you look at Zillow's data, you can see this is their rent increases for these cities, which is a lot more than 6.6%. Even for like the best case here, the lowest ones are 4.18% in Baltimore, Minneapolis, Las Vegas. The places that saw massive booms are starting to contract a little bit. It's starting to drop and not be as bad as it was before. But you could see there's not enough of these under 6.6% to justify having a 6.6% overall increase. It's not that. When you have 18, 15, double digits in multiple places, and the overall US for Zillow has it at 10.76%. So the CPI, a little weird with those ratings, where Zillow, which literally only deals with this data, has massive data into this, is saying 10% plus, and CPI is not. Maybe they're, skewing it to the downside, which is what CPI does. I don't think anybody fights that. CPI does not show the real inflation. It shows a much dumbed down of inflation. And even Peter Schiff's talking about that before the print came out, saying that Pepsi exposed the fraud of CPI by revealing year-over-year price hikes of 17%. So for Pepsi products, they had to increase prices by 17%. That's double the government official estimate. 17% likely represents a much better indication of the true annual rise in the cost of living than the 8% CPI gain, which he's probably right about. CPI is definitely keeping numbers much lower than they actually are. When you look out into the real world, into Pepsi having to make price hikes of 17%, Zillow reporting that rent increases are over 10%, and the CPI not reflecting that, you see the CPI is pulling from a different data set than really the real world. They kind of pick and choose what goes in the CPI, and they restructure it all the time to make the number come down and make it look better, because nobody wants to be the administration and the Fed that sends the dollar into hyperinflation or sends it into massive inflation. And that's one way to do it, is just by lying and taking products out and saying, look, it's actually all good. But you just can't buy, the name brand products. You just buy generic ones. It's kind of the trick of the CPI. But for this print, we had obviously big moves in Bitcoin and the S&P, or the stock market in general. You can see this massive wick down to $18,192, and then bought all the way back up to where we are now, just over 19.2. And the S&P was also trading like that, where you can see this massive candlestick. If we zoom in, you can see it trading just ridiculously. This is where it closed. So this huge gap was because the data came out, and the data came out, and the S&P plummeted, it dropped to 348, and then just rallied all the way back up to where it was, where it opened, and went beyond that and became green. So the S&P is trading like a penny stock. Bitcoin's swinging all over the place now. And just everything is volatile. Nothing knows what to do, because everyone would have looked at this and expected the market to absolutely nuke and just fall hard. And it did, but then it recovered all of it. And we can see that in this chart here, this heat map, which I took at 9:47 a.m. here. And this was what the market looked like right after open, right after the data dropped. You look at this and said, wow, everything is plummeting. This is going to be terrible. And then by, right now, this whole heat map has flipped, and now it's all green. Now everything is looking good, and everyone is wondering, what even happened? Why did the market all of a sudden just rally like this when it opened like this? So just ultimately, nobody knows what the market's going to do, how it's going to react to any news. What we do know is we're expecting the Fed to come off still aggressive, make another rate hike. It's bare minimum 0.75% increase, 75 basis point increase in the rates. And there's a good chance, or a better than none chance, that they do a 100 basis point rate hike, the full percent. And if they do that, that would catch the market off guard, and we probably drop pretty heavily, but who knows? Maybe it drops hard and then recovers right after. All you can do right now is be invested in companies and assets that you fundamentally believe are going to make it through this crazy time, and don't have massive amounts of debt that they're going to drown in, because the companies like Apple, Google, Microsoft, McDonald's, these companies have been through tough times. They've done it all. They've been around forever. They're not going to go anywhere. These companies aren't going to disappear. Apple is not going to fall off the face of the planet and all of a sudden not be a company in 5 years. They're going to make it through. They're going to probably be better off after this, and be much better and stronger and making more money after all of this is said and done. But more speculative stuff, that could fall off to zero. So we'll see what happens in the market. Truly, no one knows what to expect, because from this open, looks like we were going to plummet, and then somehow it all turned around and ended up in a green day, and a pretty big green day at that. But that's going to do it for this video. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.